Well, all right. We had an excellent date today. Let's hope for more of the same. Or we had an excellent date yesterday. Let's hope for more of the same today. I'm just getting to my coffee, so bear with me. So while you wait for me to get fired up, do me a favor and hit the subscribe and hit the bell and hit the like. It goes a long way. Yesterday, I posted some trades on Twitter, and anybody on there or tracking me, following me, would have participated in these trades. The first trade was netted about $800 a contract, and if you're familiar with me, I usually trade option contracts on the SPX, and that's what I was shouting out. And the second trade was only about $250 a contract. So I don't want to dictate what size anybody trades, but figure 30 contracts. You did about $24,000 yesterday. Really not bad. I mean, if you did 10 contracts, you made about 8,000. Don't oversize yourself. But I like to do it in units of 3, and then I hit a target, take off a third, hit a target, take off a third, hit a target, take off a third. I do that because it keeps my head clear. I'm banking money. I feel good about the trade, and I don't mind letting the last third run. And sometimes I catch those days where it starts up at about 9:30 and just goes up all day. And yeah, I have at least 1/3 of my original position making money. So, you did 15 contracts. You can go 3, 3, and 3, 5, 5, and 5 rather. Oh, I am asleep. If you did 3 contracts, 1, 1, and 1. And actually, yesterday was I took off half at 500 and the other half at 800 a contract. So that's 13. Figure about 750 a contract was the net. 8 5's 3 5 650 a contract was net. So that's not bad. If you did 3 contracts, $650, you're talking about 18, 1950 for the day. Not a bad day. Not a bad day. So anyway, catch me on Twitter. The what is it? A handle is in the description, and just track me. Hey, and if you make money, there's a tip function there. You could tip me in cash. You could tip me in Bitcoin. You make a little money. Tip your host. Goes a long way. Helps me build the channel. I appreciate all that. So anyway, let's take a quick look and talk a little bit long term about what we got going on. So here we got Powell. They're pumping a little sensationalism. Rate hikes, tighter policy will be needed to control inflation. Yeah, well, that's pointing out the obvious. Rate hikes control inflation. We know that. What was more important was that he acknowledged all of the headwinds out there. And he said that we're a long way away from normal. He said we have to move to do things to get normal, and we're a long way away from reaching normal. And it felt more in a matter of time than work. He was describing, just based on the content of his earlier testimony. He acknowledges the supply chain. And look, my general theory is that we're going to have a snapback from this inflation. It's going to come down a lot more aggressively than anybody's thinking it's going to. A large portion of this is automobiles, and wage hike is represented in inflation. And when all of that stops rising, the number's going to start dropping off. Additionally, it's an abnormal bottleneck of supply, and that's going to get resolved. And I think inventory is going to snap back, and we're going to be stuck with a lot of inventory. And I bet our next great buying opportunity will be the fear of deflation. and they're going to see a ton of shit hit the market, and there's going to be a lot of inventory, and everybody's going to start screaming deflation, and that's going to drop the market aggressively. But the reality is that I don't really think there's a long-term inflation problem, and I don't believe that there will be a deflation problem. I actually believe that Powell is right on point with what he's doing. But he can't say that because the markets and the talking heads on the radio come out and start yelling about he's acting too late or he's missing the point. It's just all sensationalism. But I think this guy realizes things. The other thing I'm certain he's looking at is China. And look, man, I've done business with the Chinese culture. And in my experience, they get very suspicious and they get very hoarding, and they hoard cash. That's it. They're very, very cheap people, and I don't mean that in a derogatory sense. They like the comfort and security of having money in the bank, and that's much more important to them. And they're also very superstitious and fearful people. So if their economy takes a little bit of a hit and their lifestyle takes a little bit of a hit, they're going to be very suspicious of it. And they're going to look at it and look at business as damaged goods. And they're going to hoard a lot of cash. Not to mention, right now they're going through hell with COVID, and there's already signs of consumption slowing up in China, and the president actually started to promote hoarding of products in the event that there's a shortage of supplies and things like that, which it's not the case. I mean, most of the shit's manufactured there anyway. So it seems like he's trying to promote the purchase of goods, but it's not effective. And so it demonstrates to me that they're already hoarding cash and developing this fear. And the fact that their government is saying, no, go out and hoard products, and they're not doing that, demonstrates to me that they're already gaining that distrust. So it's an entirely different culture than the U.S. We're capitalists. We're always going to be capitalists. We'll take a beating. We'll have a debacle like 2006, and then, we'll get back in the game because this is all we know. This is what we do. We have no other culture but money and material. I mean, that's who we are. So, I mean, I've seen it in Japan. I've seen it in Europe. The reality is that we are capitalists, and everybody will participate in capitalism, but we are the capitalists. And once capitalism gets hard in other countries, they revert back to their quality of life, back to the culture, and they put more value on quality of life than capitalism, and we put more value on capitalism than quality of life. So I don't fear these interest rate hikes. I think they're going to slowly grind up to the 2.5% they want to get to, and they're going to slowly lighten up the balance sheets. But it's not going to happen as quick as everybody thinks. And there's even going to be stop starts. So that being said, a lot of the tech companies, I feel, that took a beating, ripe for the picking, and I'm picking away at ARK right now. I think I tweeted this out yesterday. Kathy Wood's hedge fund. I'm starting to buy it. I expect to buy it, and I'll buy it between here, which it's in the 80s, down to 64. So anyway, that's the long term. That's my long-term speculation, my long-term bias. That's how I'm setting up my portfolios. We have now to look at the short term. There's a little risk going on with Russia. Russia knows how to kick their feet. Little problem with supply chain, empty groceries and supermarkets. I don't have any problems down around here, but I find the Southeast very laid back, logical, well thought out people, which I didn't know this when I was a New Yorker. Too much good news to ignore, yada, yada, yada. All right. So really nothing of any consequence on the CNBC page. But that's my spiel on some news. And hey, if you like what I'm doing, subscribe, hit the bell, hit the like. And then hit me up on Twitter. And if you make money with me, tip your host. Help me out. Show a little appreciation for my efforts. Okay, here's some market movers today. We're going to be looking at inflation, and they're expecting it high. The forecast is 7.1. Wow, that's crazy. But you know what? If we come in a little bit lighter, everybody's going to say, hey, we might have peaked. We might have peaked. We might have peaked. Here's the peak. That's what the next conversation will be once we start ticking down a little bit. Well, we've hit our peak. We've turned the corner. If we come in a little hot, I think it's priced in the market. I don't think you have to worry. Everybody's expecting 4 interest rate hikes. And people are screaming 4 interest rate hikes right now, analysts and institutions. And every time the market tanks, they're buying up, they're buying up, they're buying up. Because when it does tick down, then they're going to start screaming peak. We've hit the peak, and get a little market surge, make their money. And then they'll come up with some other scenario to force the market down, get some scared people out, buy some cheap stock. It's the name of the game, baby. And this is the voice of experience, man. I participated in it. Any of you who are new to the channel, I've been in the industry since I'm 27, 25 or 27, and built a firm from the ground up to 160 heavy hitting brokers and traders, and then made it employee owned and split. So core inflation rate, inflation, that's what we're looking at. EIA, a lot of the time the market just drags its ass until after earnings. Although this pre-market announcement might get the tone going, and we might get 1 or 2 trades in, but it's going to die off right before the oil report, and then it picks up again, just because everybody's out there trading oil. And you could trade that in futures, and I participated in that. Nothing going on Thursday, man. This just feels like a long week. And then we get some more inflation indicators and a little sentiment on Friday. And Monday's a holiday. Another thing to keep in mind, it's a short weekend, so if we do get a rise today and tomorrow, you better bet your ass people will be taking profits on Friday and protecting their interest over a long weekend. So that's the news, folks. Here's the market. We had this hammer on the daily, and a nice break of the hammer, and we're staying just under the 8, which is a little inhibiting. It may be the resistance that turns the market a little bit. But again, with the news, it's really hard to say. We're looking at futures up about 8 right now. So we're kind of looking at a flat open. Yeah, we're probably going to retrace a little bit in the morning before we make that move. You know what, man? I really just can't call it. Just can't call it. I don't even know which way my bias is going to be today. Trying to get a feel for it. This is the first time I'm looking at the market in the morning, so bear with me. Everything's kind of turning, man. We might see that 740. That's some good coffee. I'm drinking what my grandmother used to call black coffee. It's espresso, but those old Sicilians. You want black coffee or you want American coffee? Yeah. I mean, if we do get a move up, my target is about 739, 740. I mean, I guess it's all contingent on got a topping pattern on the future. But I really hate relying. I mean, I just can't rely on a technical when I have fundamental information out there, because it'll change technicals on a heartbeat. So we're going to have to just watch and see what happens to get our buys. I mean, again, I'm looking at the 740. Feels like a good target. I got the futures above its 8-day, which is encouraging. But again, we're going to have to watch that So on the short term, we're just going to have to watch what goes on with that announcement with the news, and then we can decide on our direction. And I'll probably tweet something out. So follow me on Twitter, and we'll work that out. Here's ARK. Look at that, man. I made money fast. Here's the hammer from yesterday. And I started buying yesterday. Broke the hammer and just it's starting to push up. Still under its 8-day, but it's had quite a retrace. Oh yeah, here's my fibs right here. Yeah, look at that, man. I mean, you know, we're about 50% right now. 68% it looks like. Let me just make sure those fibs are right. No, they moved. Oh no, they didn't. Okay. Yeah, we just tagged the 61%, which that's a natural retrace right there. I'll buy it all the way down to the 76% retracement. I'm already geared up to do that, but I don't want to miss the boat. I mean, a 61% retracement, that's a natural Fibonacci retracement. That's perfect right there. You know, and I would ride that. I don't know what my timing is, but I think 140 is my target. So anyway, that's as far as I'm going to go. I would be chipping away. In addition to the other securities that I like, I'd be chipping away at ARK right now. I think the Miss Wood might be seeing what I see. I think Powell sees what I see. A lot of the analysts who do make predictions base a lot of the movement on past markets and behaviors of past markets. Which there's a lot to that, but I think there are a lot of changing circumstances, and I think you know, with technology and globalization, circumstances change a lot quicker and have a lot different effect on markets. So I think that they're missing it. They're just going by a standard playbook, and a lot of people might be missing it. But that's the name of the market, right? Some people win, some people lose. You can't have winners without losers. You just try to be on the win side. Hopefully, once again, I'll be on the win side. So anyway, that's my spiel, man, for the day. Again, hit the subscribe, hit the bell, hit the like. Check me out on Twitter. Tip your host. There's a tip function in there. You could do it in Bitcoin. You could do it in cash. That's cool. Help me out. Help me build the channel. I need a big ass satellite dish on my boat so that I could stream. I'll do all of this with the support of my free folk friends. So anyway, I appreciate everybody who's following me. Just remember, stay calm and cool. Make sure you are at peace when you trade. And good luck trading.